Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, December 15th, 2021. Happy Fed Day for you guys and gals out there. Starting with markets, we have stocks mixed, commodities mostly down, crypto flat, dollar flat, global bond yields up small. This morning, big movers. You got nat gas up 2%, copper and WTI down around 1.5% apiece. On the economic front, Chinese stocks largely shrugged off the worst round of high frequency economic data since President Xi's common prosperity macro prudential tightening began. Go look that up if you don't know what that means. So looking at retail sales, minus 100 basis points at 3.9% year over year in November. That's the lowest growth rate we've seen since August. Industrial production accelerated 30 basis points to 3.8% in November. That's the highest growth rate we've seen since August. Fixed assets investment slowed 90 basis points to 5.2% year over year, year to date through November. That's the lowest growth rate we've seen since last December. Real estate fixed asset investment, obviously the key sector that a lot of the Common Prosperity Initiative is focused on, slowed 120 basis points to 6% year over year, year to date through November. That's the slowest growth rate we've seen since last September, so September 2020. Urban unemployment rate ticked up 10 basis points to 5% in November. That's the highest level we've seen since August of 21. And then looking at property prices, that data came out as well. We also saw property price. We saw property price growth slow in first tier, second tier, and third tier cities. First tier cities minus 20 bips to 4.8% year over year in November. That's the lowest growth rate we've seen since January of this year. Second tier cities slowed 40 basis points to 3.1% year over year in November. That's the lowest we've seen since February of 2016. And then third tier cities slowed 50 basis points to 1.5% year over year in November. That's the lowest growth rate we've seen since July 16. Taking it to the chart. So everything I just said about the Chinese economy slowing and having the worst batch of high frequency data being shrugged off by Chinese markets, which have obviously priced in a lot of all this slowing. I'm not saying they priced in all of the slowing yet, but they certainly priced in a considerable amount. What happens when we start pricing in the slowing in the U.S. economy? And so this is what we're showing here is the OECD composite leading index time series data goes all the way back to the start of 1955. It tends to lead swings in the GDP cycle by 1 to 2 quarters. This is why we anchor on it in terms of our growth metrics and growth forecasting here at 42 Macro. As you can see in this chart, the peaks in this cycle tend to coincide with peaks in the high beta, low beta ratio. This is high beta stocks relative to low beta stocks. Peak in this chart, peak in this chart, peak in this chart, peak in this chart. Well, this chart is peaked and starting to roll over, and it probably has 18 to 24 months of downside before it finds a bottom. Where do you think the high beta, low beta ratio is going to go in light of that? So I'll leave you with that question to ponder. I think we all know kind of the answer to that, and I think you all know how uncomfortable you feel being long of so many high beta assets relative to low beta assets in your portfolios as a function of the sort of demonstrable outperformance going back to the chart that we've seen in high beta assets relative to lower beta assets over the last 2 years. So a lot of folks are ill positioned and not positioned well for 2022. So keep that in mind as you sort of think about buying dips in high beta exposures here in this, kind of next couple of weeks. If you get a Santa Claus rally, we'd definitely be selling into that strength with respect to the high beta risk assets. Taking it back to probable range setups. No overbought or oversold signals. S&P 500's bullish FAMs minus 2% of downside versus 4.9% of upside. WTI minus 16 are still bearish FAMs minus 16% of downside versus 5% of upside. Bloomberg Dollar Index, the sort of bullish FAM still, 0.6% of downside versus 1% of upside. 10-year Treasury yield, bullish FAM still minus 6 basis points of downside versus 27 basis points of upside. Bitcoin is still neutral VAMs, minus 9% of downside versus 18% of upside. Ethereum neutral VAMs, minus 9% of downside versus 24% of upside. And gold neutral VAMs, minus 1.5% of downside versus 2.7% of downside. So that Darius Dale dropping knowledge darts on you this morning with our macro minute for Wednesday, December 15th, 2021. Best of luck out there to you all in 2022. The game will be very different.